What's up, YouTube? It's your boy MC Fire. We are back. All distractions aside, and opportunities abound, man. Let's absolutely get it. So I don't know if you guys know, I've been kind of on a hiatus, but not because we're tired of the markets. In fact, it was absolutely the opposite. But a family member got married. So shout out to my brother and his bride. If you're watching this, shout out to you. So it was a combination of a week of like the bachelor party, then a week of me being sick, and then a week of the weddings. A lot of travel, a lot of bouncing back and forth. You kind of started, you saw the start of that with the Houston trip. If you didn't see that video, go check that out. We're kind of showing you the markets in the airport when we landed. So yeah, but we are back. And what's most important is the opportunities that are out in the market are everywhere. I'm actually kind of happy that I was gone for about 2 or 3 weeks. Didn't really have any heavy positions on. We uh, just watched the market at a distance plummet, right? Absolutely go through the floor. So we're gonna get into that right now. Super excited. So let's get in. Um, Yeah, so as you guys can see, this is a Qs. We're going to kind of zoom in on the in here. For those who don't know, kind of a big fan of the Qs, kind of a big fan of SPY. We'll bring in like the minis. We'll bring in the minis real quick. Hold on, give me a slash M Q. Cool. So we'll bring in the minis. Just so you can kind of see from a futures perspective what we're talking about. So the highs being here and nice pullback of around 10%. Finally, we get a decent correction, very similar to the one we saw back here where my cursor's at. We did take an opportunity to buy there. We took some opportunities to buy some AVGO and NQ or NVIDIA, sorry. So yeah, we did take an opportunity on this dip to buy NVIDIA, right? And I'm starting to see a similar pattern here. Now, notice that there wasn't a negative cross here as opposed to what you have here. So there's something to keep in mind, right? Just keep that in mind that the trend is actually negative. So if we're looking at NVIDIA for a potential buy, not necessarily seeing that. It is a very strong company. It is still growing revenue, but how much juice is there left in the orange, right? Also, we're looking at AVGO as a potential buy very similarly, just now going negative in the trend. But the difference is it did react off this resistance level, or excuse me, support level pretty effectively, right? But has since kind of sold off a little bit back into the zone, which is a nice juicy fight. So we'll go ahead and on the weekly there, put a we'll put a line there just to indicate that we have a downtrend, right? And we want to do that just so you bring that to the front of the classroom that hey, this is a relatively new downtrend. Why is this so important? Let me actually bring me to the front of the classroom. Why is this so important? It's because corrections are actually very normal in the market. And when you get them, it is a really good opportunity to scoop up some assets on the cheap. You want to get assets on the cheap. You do not want to be left out in the cold when assets start to rise. And I'll show you a prime example of what I'm talking about here. Gold, right? Kind of the secret's out on gold right now. So that's why gold's kind of at an all-time high. But when we were kind of educating people on buying was kind of back here when gold there wasn't really a hype train on gold. Gold had already made a massive rally, but it was going sideways. So going sideways, taking a pullback is kind of when you want to get things for the cheap. People, I see a lot of ads on gold now, gold, silver, whatever, and it's at all-time highs, right? I'm not saying the ship has sailed. What I'm saying is um, buying things when they're at a discount is super important. So don't think about the times when it's pulling back, like right here. Think about these times, but these times happen after these times, right? You want to get things on the cheap if something's good. And the Qs, we'll go to take a look at the Qs. Qs currently in a nice juicy pullback. This is the weekly over here on the left-hand chart. This is the daily on the right-hand chart. So with the nice juicy pullback, about 4 weeks of pullback, 5 weeks now, if you count last week, you're looking at an opportunity for a reversion to the mean at minimum. We did go ahead and take a buy here with a double confirmation. What do I mean by double confirmation? This broke, pulled back, and then broke again. So that's double confirmation. Probably could have took another buy on the onset. We're looking just for it to go back to the mean, around the 8 period moving average, before we let it go on the weekly. Moving back to the 8 period moving on the weekly gives you a really high probability. A lot of times, even in short controlled moves, the stock does like to pull back to the 8 period moving average pretty regularly. So then it got far away from it. If it gets back to it, cool. Sometimes it even gets back to the 21, but the first sign of danger is the 8 period moving average. So 8 or 9, some people use the 9. We'd like to use the 8. It is what it is. We'll take a look at SPOT as well. So you got to get a broad understanding. Yeah, the overall market is reeling, right? It's going to the downside. So it isn't a very clear downtrend, right? You even get a break retest up here in this level. Market starts going down. Then you get a green candle followed by a red candle. Very, very powerful indication that it's going down. We call that green bar ignored. This green bar is being sandwiched by these two red bars, almost like ignoring it. It's almost like if you have ever seen a football game and one side gets the ball, the red team, right? So the next time the green gets the ball, they run, but they can't even push past really the where the red player got the ball. They couldn't even make another one of its own friends of its own color. So before the ball gets turned over and the red team runs it past where they picked it up. That's very powerful when you realize that there's increased volume here and that red uh, is absolutely demolishing green. Even when green picks it up, they're getting demolished. Good indication that, hey, probably going to be a continuation to the downside. It's not guaranteed, but highly, highly likely, right? It's one of our favorite plays. Didn't catch that. Of course, we were sick, weddings, all this other good jazz. But if you caught that, if you had the system, shout out to you, right? It's one of the ones we talk about, green bar ignored, red bar ignored. You see it again here, same thing, nice follow through, and again here, right? Couldn't even, I mean, just red is just absolutely dominating. So follow through here, green bar, follow through with red, green bar, follow through with more red. Now you see these guys, these red guys are kind of trapped. So popping above here, if we continue to get a break above this level at 569 on SPY, it peekabooed there, but seller snap back in. So this still is in the danger area, but I truly do believe that because these sellers got caught off sides, these sellers are also in danger of having a position rip against them, catching them a short squeeze, at least getting us back to the 8 period moving average. In that case, the more volatile instrument is by far, has been by far the Qs. So a lot of people have been getting short here. And with the position, more relative strength against these sellers here, this candle getting washed, this candle also getting washed, we could potentially see a bounce into the 8. So definitely like being a buyer there. But let's go ahead and bring to the front of the classroom the bar chart, just so we kind of know what's going on in respect to the other sectors. We're going to exit out that and bring this to the front of the classroom. Zoom in here just so you guys can kind of see what we've got, what we're working with. Cool. So each one of these colors represent a sector inside of the S&P 500. So 1 year performance in the S&P 500, and what you're looking at is the different sectors. Now, right now, utility is leading, followed closely by financials, and then followed closely by communication services. Right below that, you have consumer staples. So what you're really seeing is as the market sells off, what people are selling off less of to or even buying really to show strength, like utilities, things that they're not going to necessarily be the next big hit, like a new app or a new program or a new system of doing things, but it's going to stick around, right? People are going to need lights, people are going to need to have to get loans and get finance for things, banks, personal loans, house stuff, all that stuff. If you need it, finances make sense. And then communication services, that people are going to be glued to these things all day. So communication services just kind of makes sense. In a recession, watching TV is probably the cheapest form of entertainment that you can do. And so people taking and buying stuff like that makes a lot of sense, right? What's not going to be on the forefront of everybody's mind is buying a whole bunch of materials because they're expensive right now to build and grow the economy. So materials aren't necessarily at the forefront. You also have energy that is at a low. Now, that is something that I was not expecting. I would think that energy would be at a premium, but according to the new administration, they're looking to drill, baby, drill. So it drives energy cost or prices down, which means revenue for energy is down, which kind of makes sense. Also, info and tech, or not info and tech, healthcare. Healthcare for me has been a relatively safe haven of a buy. It's already at lows. How far lower can it go? So looking at that, looking at the bottom three, you see the bottom three there, and you see the top three there. Now, kind of in the middle, tracking with the S&P 500, of course, noteworthy info and tech. This is one of the reasons why we buy info and tech in such the way that we do. Is because even in the sell-off, it's pretty much going to track with the SPY as on the way down. But on the way up, it has these big booms. So even right now, if you look back even a year, like back here, info and tech tracked down to where the SPY was. So when it comes to buying things that perform relative to the strength of the market or slightly better, communicate. Excuse me. Info and tech just makes the most sense to us. Seriously, yeah. This was the reason why we're heavily invested in the Qs. We also are spread around in the spot. We do have a wish list, so we can definitely get into that. Also, coming up here in the news, we don't want to skip over that. Coming up the week, we have a couple of things working for us on Monday, which it's pretty much already the end of Monday. We had core retail sales, so shout out to that. Moving kind of forward on Wednesday, FOMC, big day. Look for volatility on that day. Could be bad news. A lot of bad news on the horizon in regards to layoffs, the dumbest tariff war in history, but it's a buying opportunity for us. We don't necessarily get political. We just take advantage of the opportunities that are presented. So a lot of other people's loss will be our win if you're averaging, if you're buying, if you're taking and buying the dip, right? I do believe that there's going to be a recovery because I do believe that to get out of the situation that we're currently in, the current administration is going to cut interest rates and start printing money. That is going to cause asset prices to rise as more money gets into the economy. You did already see that after COVID, the United States government pumped trillions of dollars into the economy. Asset prices rose in the stock market. Asset prices rose, followed on in the housing market. Right, everyone's making money. Why? Because there's more money sloshing around. More people are buying things, and as people buy more things, those things become scarce, making the price to rise. So as things get scarce and people stop buying, right? The problem that everyone is having now is that no one has any money, right? They're saying that 60%, or excuse me, 40% of people are living paycheck to paycheck. 40% of Americans living paycheck to paycheck. What does that mean? That means if you get laid off, you're going to come off your assets. If you get let's say something bad happens, Murphy's Law, anything, right? Do you have an emergency fund? Do you have enough cash on hand, right? Or do you have an account that you're pulling from, or you're gonna have to like choose between medicine and groceries. I hear that a lot, right? So in these things and what's going on, bad news becomes a catalyst for market sell-off because as more people brace in the real economy, right, your job, the supermarket, and being able to acquire energy and healthcare versus the what I call a paper economy, right? Asset prices as regards to houses, stocks, real estate, you name it, whether it be commodities or stuff like art. That economy is not really realized until you sell your assets, right? And if you're like us, we're looking at acquire dividend paying assets, we're looking to acquire growth assets and not really be burdened about selling quite yet. That's probably going to come way in the future. So but moving right along with the news, Thursday, unemployment claims. Watch out for that. That's about it for the US. So there it is. The Fed Watch tool, shout out to the Fed Watch tool. Actually, didn't refresh that. Sorry about that. But we want to bring this up because we want people to understand hey, in the Fed Watch tool, there is the next Fed chair meeting on the 19th. We just kind of broke that down to you. That's coming up. The probability of things staying the same is highly probable. 99% don't expect anything special from the Fed. The analysts are saying 99% sure that the Fed rate will stay 4.25 to 4.5. Okay, so don't expect it to be cut to a 4 and 4.25. Now, when you look look a little bit ahead to May the 7th of 2025, right? The next Fed chair meeting. Also, highly likely that it'll stay the same, but there is a slight chance that they will cut. Anything's possible with the way the economy is going currently. So just kind of watch out for that. So bring it back to the front of the classroom, the stock market chart. We do have some in place. We're going to kind of go over that right now. And then, you know, we'll talk about what you can do about it, how you can help support the channel, all this other stuff, right? So we have 3 lists. One of them is our new kids on the block. Basically, it's going to be things that are getting a lot of traction, kind of either in the news or on the social media airways, right? And things that we definitely want to take advantage of when they're there. So that's the new kids on the block, new plays, right? ETF hot list. If you guys have been watching the channel, it's basically the big boy list of things that we're watching ETF wise, kind of more safer looks there. And then on the top here, you have our in play list, which basically derives from the entire top picks of the ETF of our ETF watch list. So if you go to those ETFs that we showed you on that sector spread with the bar charts there. Each one of those we put the 10 top holdings of those ETFs into a watch list and look for the in plays. We're going to get into that right now. So starting off the list, we have good old Netflix. Now Netflix makes the most sense to buy in a dip. If you know, Netflix is almost recession proof. You saw here that as it pulled back, the setup is still strong, like super strong in the open. Sell off, massive sell off. These guys get caught, rip, right? First sign of danger when the sell off started. Makes perfect sense, right? So if you took advantage of that, that is something definitely that we would have definitely taken advantage of if we saw. Of course, we were sick and traveling, but this play makes the most sense, right? And the new setup candle, a little bit of a blowout because it kind of got back to where the selling really accelerated, got up there, hammered in. You can expect to see this has done so. Runzo. Also, we probably need to get rid of this, right? This was a butterfly there. Get rid of that. Nice delete there, and then get rid of this. Nice delete there, right? So getting up to the level and it makes sense from the fundamental standpoints, kind of blowing past it, but sellers really stepping in kind of at this zone. So you can almost mark that, but we like to mark our charts up on the weekly. Something to keep in mind. ABV is the next one up. Now, ABV clearly in a downtrend, right? Broke structure to the downside below 215.94, 215.94 below to the downside. So as it retest, right? Hopefully we can see some failure because it is retesting at the level and at the moving averages. Really powerful, not necessarily looking at the moving averages as like resistance, but looking at the 215 as resistance. And anyone who is looking at technicals will see that and say, oh, I want to take a sell, right at the 8 or the 21 period moving average. Something to keep in mind, right? So look out for that. A little bit of retest, look for fail there. Not necessarily anything we take a pull a trigger on now. This one though, you can see a lot of sellers and buyers fighting down here. A lot of volume happening down here. But we're already looking at 3 ATR. So let's say, for example, if we get another break above here, you could say, okay, I could take this back, maybe potentially to the 8 period moving average on a nice 1-to-1, break at the low, we'll let it go, kind of deal, right? Keep it simple, stupid. The reason why I like this system is because you're not just playing the markets, you're adding the trend, playing against people that necessarily get off sides in the wrong market, right? If the trend is up on a higher time frame, let's say they're looking at the daily, right? Something like this, right? As it drops, you see it crosses and bam, pops up. Nice rotation, nice bounce, really good play, right? This is something we love to take all day on Duke Energy. As you see, nice, juicy, tight, high volume candle here. And for the setup, and then ram 3 days of running, right? Typically, we say our plays play out anywhere from 2 days to 3 weeks. So, as you can see here, it played out pretty nicely. Nice trend change, nice pullback, tick to play, easy day. AEP is up next. So AEP, high uptrend, right? Nothing really to do here. It's kind of away from the moving averages. But this would have been really nice for you to take that really nice rip there a couple days on this. Also, this one would have been nice to take on there too as well, right? Just keep that in mind. The only thing I would say against that is the trend was not your friend. So you could take this on a confirmation by bias, But the reality is the setup is still the setup. These people, massive selling offsides, is going to be some buying happening. Same here, going to be some buying. The way this candle steps in and watches that, I could almost expect to see some follow through. Highly probable for sure. CCI is on a couple lists. So shout out to CCI. New uptrend on the weekly, right? So pullbacks are in effect. Now you do see this red candle is nice and tight. I'm not necessarily looking to take this. We're only really wanting to take the most optimum setups. What do I mean by that? Do you see it rips into the moving average, and then into that moving average cloud here, as indicated here, looking to take that failure, right? That's kind of what we want to see. Nice buy here and then nice follow through. You could see some of that here, maybe, but in reality, I want some of the best setups in the best position that have a lot of meat on the bone. This doesn't have a lot of meat, right? We're expecting it to go maybe to 3 ATR. New uptrend though. I would like to see it kind of pull back, reestablish some more reestablish some more support, some more buyers, and then continue on moving forward. Moving on to the next one, COHR. COHR. Shout out to COHR. Kind of in the dumps, really nothing to do here, really close to the 3 ATR mark. Now, what that means for us is just wait and see. Be patient. Patience is the name of the game. Wait for your pitch. Wait for your setup. You also have DT here. Now, DT, something that's been coming up a lot, especially like over here. Now, you could use this as a potential buying opportunity, stuff like this, as it pulls the moving average tight, nice off support. Green, you see the volume here, and then rips, absolutely rips. Not too bad as an indication. Now you do see here that is a downtrend, so we're looking to short these rips, but just something to watch to show that the setup is in full effect, even when we're away, right? Now you do have IONQ, IONQ. I believe that's also down here. Yep, IONQ. Now it is in a downtrend now. So what are we looking for? Now, when you see the fact that earnings was absolutely atrocious, you can understand why this is something that, even though um potentially is a good opportunity, you could see, well, let's wait for some more confirmation for the buy, right? You're getting a little bit of that action here, little red bar ignored action here. You can almost say, okay, red bar ignore action here. But the problem with the red bar ignored action is that the resistance at the 8 period moving average is right there. Also, when you look at the weekly chart and you plot your level, there you go, right? You're not getting much meat on this bone. You are getting sellers stepping in. This absolutely is resistance. So keep that in mind. Not necessarily something we're looking to step in front of at all. So keep that in mind. We'll move on. I want to put this other level here. Let's kind of get the range there. Nice $20 range or close to it. All right, cool. MCH. MCH, as you can see here, I mean, I can't really express it enough, right? You have an uptrend, pretty defined uptrend, nice pullback. Here's a juicy setup candle, almost gets washed, no indication to get you in there, but there is one to get you in here, and then it absolutely rips. So, I really can't stress to you enough that trading this way makes a lot of sense for catching people off sides, high volume, and that's how you make pretty good money. Shout out to Gary Stevenson, who most of the time, if you watch any of Gary Stevenson's video, which I like watching Gary Stevenson's videos, he is what some people would call he's an economist that talks about wealth inequality a ton. What he says, though, he was a trader that worked at Citi. I'm not going to go too much into that, but what he says about trading, being the number one trader at Citibank, um, at a very young age, was saying, "Hey, the way you make money in trading isn't necessarily being right; it's being right when a lot of other people are wrong." And that's why I love this system. This system maximizes on that ethos to a premium all over the market, finding out where people are wrong a lot. And then when they are confirmed to be wrong, you just step in. QUBT. So QUBT, potentially the 21 period moving average is still moving up, and that's kind of confirmed with this nice volume buy candle. I would definitely see, if you can see a break above these guys, maybe that's a profit ticket. Maybe that's some people shorten the rip. But if you can see a break above there, I definitely could see potentially a buy for this really, really cheap $8 stock. So something to keep in mind. I would be looking forward to the upside. When in doubt, 21 out. The 21 period moving average on the weekly is moving up. Earnings is coming up though, so could hardly be too little, too late. And people, the word is out. Same thing here. Really cheap stock, $11 stock. Earnings not doing so hot, but people still decided to buy. But what you could see is this nice red candle here in a setup potentially at the break of that red candle at 11:39. 11:39 is potentially the break. As you can see, we're still kind of getting over sickness, even though I went to my brother's wedding. It's crazy. When you change time zones, if you're changing temperature environments, your body is like, yo, what are we doing here? Moving right along, we want to keep things rolling. VZLA. And if we're going too fast, feel free to stop and rewind the video. That's kind of why we like to do it on YouTube. VZLA. Already massive push, and you guys already kind of know what I'm going to say. From this rally, you kind of know what happened, right? Opens, absolutely fires off to the upside there. Nice hammer kind of gave you the indication, hey, this thing could go to the moon, which it does. Absolutely nasty rip, targeting highs. Shout out to you if you took that play for VZLA. It was in an uptrend, so this kind of makes the most sense taking that play as it crossed above there. And last but not least, whoa, what is it good for? Absolutely nothing, right? So if you can see here, nice green bar ignored here. Now, granted, right, this is a red candle. Yes, because it opened up here and then closed down here. I get it. But this is pretty powerful, right? A lot of volume here, and it gets above there. Nice pullback. So really what this is setting up for is you got sellers, buyers, buyers really fighting here. And then now it kind of pops on them, pulls back to the level, and then what do you think is going to happen? This acts kind of like a support. Buyers, if they once they profit, they're taking profits, but this becomes new support. We're hoping to see a rally back up to 2174. So shout out to us for coming back all in one piece, guys. Thank you if you were praying for our success. And we did Passover as well as my brother's wedding, and we also we're kind of getting over a little sickness there. But the beautiful thing is we're back on the grind, and this is growth season, right? Me and Q are what we call dinkle, right? Dual income, no kids, no liabilities. So this house, dual income, no kids, no liabilities. So all of our assets, all of our potential earnings, and all of our potential debt leverage could be used towards acquiring assets, which that's what we like to do. We like to limit doodads. Shout out to Robert Kiyosaki in his book, Rich Dad Poor Dad. If you don't have it, definitely recommend you get it. That is a knowledge base for sure. So definitely get that. But in this new season, right, we don't have any more distractions until we go to Japan later this year. So really going to be looking to maximize this opportunity. You're not going to get corrections like this. Now, keep in mind, there could be another 10% pullback in the market. So full disclosure, it is risky, but if you're dollar cost averaging, you'll be just fine, right? You'll be just fine. I believe that. Okay, that's not financial advice. I'm not telling you what to do with your money, but what I am saying is the market recovers pretty regularly. So a lot of the experts, they're buying the dip. They're buying the dip. They're buying the dip. They see this opportunity as an opportunity to buy the dip. So I encourage you to do the same. This is MC Fire letting you guys know you guys can win in this market. And we're here to guide you and lead you all the way. So have a good day. We'll tap in with you guys soon. Thanks for supporting the channel. You guys have a good day. Peace.